How are you, Dale?
Yeah, yeah. I really didn't have a chance to read about your background until this morning, and I boned up a little bit about your journey, and it's impressive. Okay, so,
Thank you.
um, my question is, you were with the Haynes family, and then you were with Lehman. So you were with Lehman when they still existed. So I'm assuming it's before 2007. I'm guessing you're probably 50-ish or something like that. I know you're not as old as me. I'm a senior citizen, but
I'm
I'm
mid
interested.
40s, Dale.
Mid 40. Okay, I'm sorry. I apologize, but you were
It's okay.
actually handling some. You were handling some great accounts,
Yep.
Schlumberger and KKR and Gillette. What were you doing? Handling the hedging for them?
No,
Currency risk?
I was actually an M&A banker for a number of years. So I was
Okay.
doing mostly equity capital markets, um, debt capital markets work, and M&A generally.
Okay. So then, get in a time machine with me and tell me how you ended up gravitating towards becoming a trader. I know that you have become an e-waiver, and that's part of your discipline. And
Yep.
sounds like you're a macro guy, so you probably pay attention to correlations and try and put the whole jigsaw puzzle together and see what the market messages are from different asset classes that you study. So tell me, when you first started becoming a trader, how long did it take you to be convinced that Elliott was going to be a main method that you were going to implement?
Well, firstly, thanks for having me on, Dale. I really appreciate it, and I really do appreciate the service you provide to the community. I think it's fantastic, just getting people face to face with traders and put everyone out there. I think that's great. So thanks for that.
Well,
But I actually,
oh,
I,
thank you. Well, I'm wearing my Mario Draghi T-shirt provided by Adam Buck at Forex Live. So Mario is going to be playing the guitar pretty soon. So we're going to get to that,
yep,
Dario. And so
I'm a
again,
big fan of,
Elliott
I'm a
Wave.
big
I've
fan.
interviewed, I've interviewed many e-waivers. Okay,
Yep,
and each one of them says that they have their own style, their own interpretation. They e-waivers have disagreements on alternate counts all the time.
yep.
Tell me why you gravitated towards Elliott Wave, and was it Prechter or R.N. Elliott? I knew a guy
I'll,
in
I'll
Southern
step back into
California.
the I'll step back into the
Oh,
time machine a little. I
okay,
actually started trading just outside of high school. Joined up with with a buddy of mine whose dad was a trader, and we started trading penny stocks and futures at the ripe old age of 18.
what
Um,
a combo.
and yeah, exactly. And so I kind of had a passion early on for trading, and I guess when I went to university, and I had a professor there. Well, studying business finance, and he was an ex-bond trader. So we used to constantly have discussions about trading and the bond markets and how the world worked. And so I did a business degree, and then my first job out of university was with Portland House, as you said before, and it's a basically a private family office in Australia, which at the time they're worth just over $1 billion. So they're effectively a hedge fund manager with their own money, and
Okay,
that was the introduction to me to macro and the whole idea of how the world works and fitting a jigsaw puzzle together. They were investors in Soros and Druckenmiller back in the 90s. Um, and less spectacularly, they were an investor in LTCM in '98. But they were big
not bad.
followers of Paul Tudor Jones, Soros, Druckenmiller, and they
Yeah.
also followed Prechter at the time. Now, I guess for me and what they instilled in me very early on was the idea of a macro environment and really using technical analysis and understanding that price matters in terms of timing and entering trades. So that was really quite important to my development and how I got to where I am today. But step forward, I stayed there at Portland House for about 3 years. I was hired as a macro analyst or a market analyst and economic analyst. And within 3 months, I was given a trading book to trade. and also help on the investment committee for the major book for trading as well. So I stayed there for about 3 years, and then graduated my MBA about 95, and then went into the world of investment banking, primarily to get an understanding of really how business works, how the world works. So I did that for about 13 years, mostly in M&A in Sydney, Melbourne, Singapore, New York. And it was just a fantastic experience. Got to meet some great people, great connections, and a great understanding of how debt capital markets work, equity capital markets work, and how it all fits together. And that culminated mostly with Morgan Stanley, but that culminated in 2008 when they actually fortuitously closed the Lehman Brothers office in about April, which is before they went bust, which was great, which means, I
had
went out
time to prepare. You had time. You had time to find another lily pad.
Exactly. And,
Okay.
for me, it was, I went away rock climbing for a few months up in the US, Yosemite, and, I've always loved trading, always had the passion for trading, and always have done it since I was 18, even while I was working as a banker. And I decided to start trading for myself full time. I had enough risk capital, I had a really good understanding of how the world worked, and so I went out on my own.
Did you ever have a blow up where you blew up an account?
No.
Good.
No.
I have. Okay, I plead guilty to it, and it's probably the fact that you started so young, you had so many varied interests, and you had seen so many other people blow up. How would you say that you avoided it? I preach, I actually even sing a song, use less leverage when you trade the market, use wider stops so you don't get picked off. Was it your awareness of leverage that even when you were in drawdown periods, it didn't turn out to be catastrophic for you?
I think I got lucky, quite frankly, because in my first year of trading full time for myself, which was 08, 09, I just had a cracker year, and I was up over 100%, and just and I thought I was indestructible, right? So this is the classic, trader who thinks he knows too much and just thinks he knows how it all works. So
Pride,
first year was fantastic.
Before the fall, hubris. Pride before the fall, hubris. Yeah.
Yes. And so there was plenty of hubris to go around, and the market, as it does so well, taught me a lesson the next year, and ended up giving it all back. And then it was like, okay, so I don't know everything. So well, not all back, but most of it. And from then on, it was more about really defined, getting back to the focus on risk management, and changing my approach to really not trade every day and not intraday trade, and much bigger focus on looking for the fat pitch.
Interesting.
So,
okay, so
because of the macro, and Elliott Wave to me is an overlay. Yes.
Less is more. Right.
And I'm a big believer in the payoff pitch.
And the waiting's the hardest part, isn't it?
Yeah, it is, but I've been doing this for a few years now, and it gets far easier. You become more patient, and my time zone doesn't allow me really to intraday trade that much, because I'm based in Australia. Not a lot happens in our markets unless it's an Asian denominated event. Right. So I'm forced to actually be patient.
You're forced to be a position trader because a lot of the expansion of range, average trading ranges, happen in the London and U.S. session.
Exactly.
Right?
Exactly.
Okay.
And things like risk management were drilled into me pretty early on when I was at Portland House. I remember back in '94 when bond yield went from 4 to almost 6%, and we learned pretty early on. Well, I learned pretty early on the impact that has on fund accounts when you have such a wild move like that.
Okay, so what do you mainly trade, Dario? Is FX your central interest, or are you involved in many other asset classes? To me, a chart is a chart is a chart, and the only difference is the title, the leverage, and the beta. So
Yeah.
what's your
Yeah.
poison?
I trade FX, mostly the majors, and I trade commodities. So only the highly liquid commodities like oil, gold, um, and I trade a lot of E-mini futures, Nasdaq futures,
Mhm.
so forth. So in terms of having a macro perspective, and I also trade the Nikkei and the DAX as well. So I trade European indexes.
Okay. And
I
so
would
I'm
look at
gonna.
probably about 26 different products, really.
That's a nice menu. So I'm guessing that your work is focused on dailies, weekly, monthlies, and then you drill down for entries on shorter time frames. Am I
Ex-
guessing correctly?
You absolutely are. That's exactly how I go about it.
So,
And and to your question earlier about Elliott Wave, I was introduced to that with Prector back in, I guess it was kind of 92, 93, and it just resonated with me. The idea of pattern recognition was very easy for me. So that just seemed to make sense in terms of putting a framework and a price structure over a market. It just made sense to me.
can you, having been a follower of Robert Prector, and I was as well, and when he was really, spot on before he expanded and had guys like Hochberg and has a whole staff covering
Yep.
different instruments. Can you explain how someone with so much wisdom about the markets could have been wrong about this bull market and equities for so long?
I can only put it down to his focus on socionomics, and he's far less involved, it seems, with the intraday analysis. I mean, yeah, don't
Could
get me
it be?
started on Hochberg and co.
Okay, but could it be that prior to 2007, that the nature of the markets changed as central planning became part of the market fabric that may have
Yes,
had an effect on what was traditional Elliott Wave analysis and the game changed?
potentially, but I actually think it's more to do with his
A
Conquer the
bias.
Crash. His Yes, exactly. His Conquer the Crash
Okay,
book, and seeing
okay,
from the hymn book where it's all going to end, and you let that bias overwhelm the actual price action, right? Which is
okay,
just crazy.
okay. So, what do you do besides trade your own account? Dario's Twitter handle is at Traitor underline Mars. How did you come up with that handle, Mars?
My business is called Mars Capital Partners,
Okay.
and my wife will
Well,
tell you it's because my returns are out of this world. But it's more to do it's more to do with the fact that Mars was an old school nickname that came up. It came up pretty early.
that is great. All right. So you have obviously you have a fan. It's great when your wife is a fan, especially in this
Yeah,
industry.
yeah, and I'm finding out I'm very lucky because she's incredibly supportive, and she also does a lot of the analytical work for me, like commitment of traders reports, liquidity reports from central banks, and so
Wow.
it's a family business right now.
Okay. All right, Dario, you have a great story and a tremendous background, but that was yesterday. So
Yep.
here we are, the stock market. I want to talk a little bit about your macro views, and perhaps you could tie in some Elliott. And if you'd like, you have the option, if you go to the upper left-hand corner of the screen, there's a green box with a white arrow, and you'll be able to share a screen and maybe some looks. So here we
Yep.
are, the worst January in stock market history. Okay, the worst. I mean, worse than 2007, 2008, worse than the crash and bear market in the 30s. And here we are, only about 2% away from contract highs in the S&Ps, 2130. And right now, I think I'm seeing my chart up there in your box. So I'm not sure if you're in
Has
the
that
room or
changed?
not. It didn't change yet. I'm showing my Euro chart up there.
Is
Uh,
this okay? Wait, I'll try that again.
Yeah, maybe you clicked the wrong desktop. So what I'd really like to cover is basically, are you a believer?
How's
There we
that?
go. There we go. Okay, so are you a believer that just because currencies are the deepest market, bond markets dwarf stock markets and currency markets dwarf bond markets, that the dollar is a linchpin to everything that's happening here?
Yes. In a word, yes.
Okay. Okay, so we're
And
looking at, go ahead.
yeah, and kind of key for me. I mean, I was pretty happy getting along around just under around 1800 in the E-minis,
Oh,
um,
nice.
because I've been counting this out since I don't know. I guess it's midway through last year, and particularly since November. This November top to me was a no-brainer to get short, and I was happy buying it back. And getting long again around 1800. So
All right,
I've had a
let
pretty
me,
good run.
okay, so you actually, when you were buying it down there, I know a lot of technicians. I mean, I talked to an E-Waver, Peter Goodburn, who's pretty good, and he's looking for 2235, and I know a lot of the bulls are talking 2400. But when we were down at 1800, were you looking for this much of a recovery, or were you looking? There were some E-Wavers that were just looking for maybe a bounce to 1970 or so before. And then a resumption of the downtrend. Did you have it identified at 1800 that there could be this much of a move? Then it looks like you think it hasn't ended yet either.
Yes, I was of the view that it was a C wave down that whole decline, and
Okay.
very early on the piece. So, and
Okay.
when in November, back when we made that high, it was clearly we had 3 waves down, 3 waves up, and for a flat, we needed to go down back to 1800. So my expectation when it was down there was we were making all new highs, all-time highs.
Okay.
And it was actually yesterday I went short. But all my stuff and all my work is on my site, marscapitalpartners.com.
Okay. So you went
So,
short yesterday. Let me just guess, because I'm really not an E-Waver, that your reason for getting short is that we're completing something up here, and perhaps we get a pullback down towards 2000, 1970, which is may have been wave 4, depending upon how you label it, before we get
yep.
the move, the melt up. Am I correct?
Kind of, yeah. I'm looking more towards the 1960 level as a start.
Okay. All right.
Primarily because there's no way I can count this count as it is now as an impulse. It could be a leading diagonal if you cheated a little bit, and that kind of makes the most sense. And a lot of these 3-wave structures,
Yeah.
or
So
the bears may be right.
the bears are saying this could be an ending diagonal that we just had over the last 3 weeks or so, right?
Yep, and that could absolutely be right too. But from my perspective, I'm not employed to be right. I'm employed to make money, so I don't actually care.
That's a
So,
pearl. That's a pearl. And you're self-employed, so you'd have to fire yourself if you didn't follow that Bitcoin.
exactly.
All right.
Exactly. So I went short based on it was a lot of 4-hour MACD and momentum divergence. It looked like a complete count. I was risking 16 points to make, up to 90 points. If it's a bull case, it should get down to around here anyway, from a bullishness
1960.
perspective.
Even if it's
Yeah.
bullish, 1960 is in the cards. Okay.
Yep.
So does this imply, if we're going to get this pullback in S&Ps, because I've been a little confused on how the correlation with a strong dollar, because for most of this advance from the lows in February and March, we've had the market advancing with the dollar advancing at the same time. And then a few weeks ago, when central banks got involved, the dollar weakened and the market still liked it. So if we're going to get a pullback to 1960, is that going to be accompanied by a dollar rally? Or
I think so.
Okay.
I think so, but you know, dollar yen's reached kind of my first target at 108, and
Okay.
just a natural target. But
Right.
the reason we had the flip flop is because in that time you had also the FOMC come out, and Yellen did a backflip, which is pretty important.
Yeah.
And her backflip was
She's
saying,
doing a kind of a very very subtle trichet, isn't she?
yes, and she was very clearly signaling that the intention is to weaken the dollar and effectively join the currency wars to save China, is my guess,
Okay.
and to try save the Chinese market and to stop the devaluation of the renminbi. So,
Do you think that at the
she's
last
success.
G? Do you think at the last G20 meeting they had kind of a covert Plaza 2.0 accord, and that's why the dollar?
I I'm not a big conspiracy theorist, and I don't know what happened in the room, but that has been the result.
Okay.
So,
Okay.
price tells us everything we need to know, I think. So,
Okay. So we have your
and
view. We have your view on on the market here. I know a lot of
yep,
Elliotticians, and maybe the dollar downdraft isn't completed, but a lot of Elliott Wave guys still think that the dollar index is incomplete, and there's one more wave to the upside to complete it above 100. Is that the way you're seeing the Dixie, or you could show us, since the euro is pretty much most of the Dixie, what your view is
yeah.
there?
Um, I'm torn. My base case is this is just a large fourth wave for the Dixie.
Okay.
That's the base case.
Okay.
But I'm very aware that the environment is changing, and the question is whether or not the Fed or Yellen in particular can be successful and keep driving the US dollar down, or who wins this little war. So
Right.
naturally, you'd expect another push up in the US dollar to new highs to make a fifth wave. And all this price action is corrective. Can't really find an impulse wave in there. It's probably better. I'll put a euro chart on there because that might actually
All right. You bring up an
be a bit
interesting
clearer.
point. One guy, an e-waver I know, this is his statement, that because of the currency wars between global central banks, that almost everything in the FX arena is corrective rather than impulsive, like you could get in stock indices. What do you think of
I
that statement?
I think that's actually very true since the euro bottomed basically March last year.
Okay.
Um,
So every
and I
so
understand,
it's
and even but if you
go
look at
ahead.
things like the Aussie dollar, that's not
Yeah.
true. The Aussie dollar is still trending. Canadian dollar was still trending. So the commodity currencies
Yes.
still in trending markets, but the European indices. And I've been telling anyone who's been willing to listen for the last couple of months that I just haven't been trading any. I haven't been trading the Swissy, the Euro, the Pound, the Dixie because it's just a chop fest. And I
Okay.
think it's helpful if you know that in advance, then you know what markets to avoid.
Okay. So you're going to
Yeah.
avoid ranging markets and look for trending markets, and we definitely have that in Aussie. Do you correlate the
Yep.
Aussie at all with the action in the gold? Because I do, and people have told me that I'm wrong. I should be paying more attention to the base metals than a precious metal like gold when correlating it with Aussie.
It has a really tight correlation with copper.
Okay, copper. All right.
Yeah. If you bring
Okay,
up
so
the
tighter with copper than with gold.
Yeah, in my view, yeah, but
Okay.
it can also depend on the stage the market's in. But as you know, correlations don't stay constant; they often
That's for sure.
change in character.
Yeah. How about the Canadian as a petrocurrency? That correlation seems to be pretty strong up until the last week or so.
Yeah, up until the last week, absolutely. And it was quite interesting. The high in the US dollar CAD was about a point at. It was exactly to the nickel of 0.786 retracement of the previous entire low decline. So it reversed exactly where it should have.
You know, and after that reversal, again, an E-waiver comment, I'd like your view on it, that the way the Canadian USD CAD came down and gave back all those gains in an impulsive fashion, that is a sign that a bear market is starting in USD CAD, and that all rallies should be sold, which will also imply that the crude oil market has most likely bottomed.
Yeah, I'd agree with that.
Okay.
I'd
Okay,
agree with that.
because of the way it gave up all those gains, that was it.
And the way it reversed, I mean, it's just the way it reversed. The 0.786 was pretty much exactly here, and it was an impulse on the way down. This is a weekly chart, so it was impulsive on the way down.
We're still looking at the S&P chart, buddy.
Okay.
Oh, yeah, it's still the
Oh.
S&P chart that you have up here. So maybe I don't know, maybe you have to stop the screen share and do it again to get another chart. Normally you could, if you just change the chart on that. Still trying to get the hang of Hangout myself, Dario.
Yep.
Okay, there we go.
How's that?
Yeah, beautiful.
I'm not sure why I keep switching every time I switch charts, but basically the decline and a three-wave up is the tell, and the impulsive nature of this decline. It's interesting where it's kind of stopped here.
Yeah, isn't it? Yeah. Okay, so if we give up that major support level, it's possible we're looking at 120, 115 longer term.
Yeah, that would be my view. Okay. Absolutely.
Okay.
Which, you know, in terms of oil is fairly pretty. It either made a low. Whoa, sorry.
In February at 26, or there's another retest coming.
Yeah, and there are arguments for both cases.
Okay.
I'm going to try.
And then I want to move to gold, because you know the headline is this is the best quarter in the gold market in I don't know how many years, 13 years, 14 years, and you know a lot of people looking for 14, 1500 Super Bulls, looking for over 19 again. But yeah, let's start with this. So we have the crude here. A lot of some Elliotticians were saying this bounce was a 4 that we had from the recent lows, and that there's another wave to the downside that can retest those lows. It doesn't look like you're in that camp.
Well, I am in that camp, but I'm open to flip-flop on that, given the nature of this decline. I mean, the upside target, which I kind of published in my post, was pretty much nailed.
Yeah.
And this is you would expect.
I guessed right on that too. People thought I was crazy when I was buying it under 30, but I was saying 38 to 41. Okay, so you know, even a broken clock, right, buddy?
Exactly.
Right twice a day. And I'm just being humble. So, in fact, it's with the greatest of pride I'd like to announce how humble I've become.
Look, I try to be flexible in my approach in terms of, I certainly have conviction about where levels are and where they should turn from, but then I very closely track how they trade and how they trend.
Right. Right.
Yeah.
Yeah. So you're still
the bias to me is still to the downside.
Okay. So you're in that camp. So that probably would imply, you know, wouldn't you think if we made new lows in the crude because of what was happening to high yield debt? I ask this because I know you're a macro guy that looks at themes, and a lot of the weakness in January in equities was based upon the fear of the junk bond market being under severe pressure. And so we've relieved that pressure. If this was a wave 4, and if we have a wave 5 down to your target, that pressure will reemerge, most likely with a stronger dollar too.
Yes, exactly. From my perspective, the high yields and also watching closely the EEM, the emerging markets look
Yeah.
they look very bullish, and they need to burn off some of that bullishness. I think we've had a nice impulse off the lows,
Right.
and what would be nice if crude made a marginal new low, equities made a deep retracement, but not new lows, obviously. And you
1860.
had, yeah, exactly. And then you had um, emerging EEM basically have a deep kind of 50% retracement of its recent rally. And that would align all very nicely with a nice big happy buy signal, which is what I'd be doing.
Sometime in May, June.
Yep.
Okay. So, God, great views. I'm being edified by you. And what I
Thank
like
you.
about these interviews is that I may have some ideas, and then when I talk to people and they use a different method and they're coming to the same conclusions, to me that's confluence. And I get that every day in our community because I encourage people to share their work, and there's some great traders in our community, and when one or more are pointing towards the same outcome with different methods, it actually gives me more conviction about a scenario.
Yeah, and I remembered in one of Nicola Duke's interviews, you talked about the idea of collaboration. You're
Yeah.
competing with yourself, but you got to collaborate with the community. And being
Oh,
an independent trader, I
so
absolutely get that.
okay, so you come in and you watch the interviews. That's flattering to me. That you also,
Absolutely am.
were aware of my work, and I know a lot of professionals enjoy the interviews, especially if
Yeah,
it's someone that they admire. They catch them, so that's a compliment to me. So
and
why
you
don't
also
we
you also
wrap it with? Go ahead.
I was going to say it's also in the world of social media. You rarely know who's on, if it's a robot or who's actually on the other end of that line. And I think your service and service of chat with traders and so forth are great because they put a face to the actual person. Yeah, I think that's valuable.
Okay. I appreciate that. And that was one of my favorite interviews up until the one with you with Nick, and she's going to be back at the end of the month. So why don't we go to your look in the gold now,
Yep.
Dario? Because
Sure.
I'm interested in how all of this, if we get this decline, this correction in S&Ps, we get this break in crude oil, that perhaps gold initially maybe it makes one more new high. I'm a big proponent of something called the three drive formation,
Yeah, I've
and
seen
if
that.
we got one more high or a right shoulder up here, do you think that if we have this whiff of deflation set back in again and EM's correct halfway, that gold, I see you looking at gold around 1140. I actually
Yep.
think there's a shot for the 78.6 at 1100. It can change, but if we got down there, that would be an aggressive buy for me.
Yeah, absolutely. I agree wholeheartedly. My macro view, for what it's worth, where we are today, is that
Yeah.
everyone's talking about deflation and how it's going to ruin the world and so forth. And to the point where Yellen's now joined the party. If she gets more aggressive in terms of cutting rates again, I think
Hmm.
my bigger picture view is I'll be looking to get very, very long gold, very, very long oil, silver, you name it, anything, if we get a decent pullback, which I kind of expect in the next few weeks.
Okay. That's interesting because I think that also would tie in with the dollar top in my view, because we're talking about reflation here, and
Yep,
the biggest drag on the market has been the ending of a bear market, long-term bear market in commodities, and it's going to take leadership, just like this recent bounce. The oil shares have been a big part of it. The recovery in gold shares. So perhaps that's what it's going to be to get to some of those upper levels of 24, 2,500. Even some Super Bowls are talking 2,900
yep,
into 2019, 2020. It's a reflation event, which makes me think that if all this plays out, the market that people have given up on being bearish on, that the short of the next 2 or 3 years could be in treasuries.
Absolutely.
Wow.
That is absolutely my view as well.
Wow. Well, you know, I
Uh,
am a mind. They call me Kreskin. I'm a mind reader. So you know what? You know what you've accomplished? You've accomplished putting together the whole jigsaw puzzle in 20 minutes.
Thank
And
you.
that to me, that's a great presentation. And I'm so glad I reached out to you on Twitter, Dario.
No, I appreciate you did, and I often get told I only do work under pressure, so that's probably why I fit it in 20 minutes.
I'm like that too. I would procrastinate till the last minute. So let's have this final segment be, what's the best way for people to get involved with you? Do you teach a course? Do you have a course? Do you have a chat room? Do you have a signal service? What is your model for the retail trader?
I have a website, marscapitalpartners.com, and it's currently and for the foreseeable future is a free blog site. And once a
Okay.
week, I'll put basically all my thoughts for the markets, primary markets, whether it's gold, silver, equities, treasuries, other commodities, and FX. So that's just a free service, and I just post that. And the reason I do that, it actually helps me do my work.
Yeah,
So
it
I
makes
put it
you
out there
accountable,
for
doesn't
everyone.
it?
Yeah,
It makes you
exactly.
more accountable to yourself when you pen it and put it out there, and
Yep,
and it crystallizes it for you.
exactly. And that's kind of writing it down. It does exactly that. Helps crystallize
Yeah,
it. So
I mean, I've
yeah,
become a
make a
better
contact.
trader. I've become a better trader the last 3 years, from crystallizing my views every day with the community and collaborating with the community. It's a pretty lonely business, so
Yep.
how do you, besides working with your wife, how do you cope with the solitude of being a trader?
Um, I keep pretty busy. I do have a couple of consulting gigs where I consult with a couple of hedge fund managers in the US, in Canada and in the US. So I do some work with them. So I do stay active in the community from that perspective. But it's also social media
Okay,
is helpful.
okay. So basically, you don't have a service to sell. You just put
No.
something out for free.
Yep.
Okay.
I try to intend on make my money from actually trading.
That's a great credibility point for yourself.
Thank you.
Okay, so you know a lot of people, myself included, I can't completely rely upon my trading uh, outcomes, and I seem to trade better when I have other revenue streams, so that
Yep.
I'm not as, because otherwise I don't know how you overcome it. But if it's my only revenue stream, and I talk about this with people, I'll find myself sometimes not being able to be patient. I'll start going from pair to pair and say, I hear this thought in my head, I need to find a trade.
Yeah.
And
I
you
I
got to
mean I
delete that. You got to delete that.
Yeah, and I absolutely felt that early on, but I think over time, it's just the nature of my trading is that it is longer term, so patience is required. And in the meantime, I live up in the mountains, so I can go skiing during the winter
Yeah, it's wow, it
or
sounds
go fly
beautiful.
fishing in the summer.
Wow, you're living the dream, buddy. And thanks
Thank you.
for and thanks for sharing with us what got you to that point,
Oh,
and
thanks for
giving
having
us
me. I
some
really appreciate it, Dale.
and giving us some views that I think are excellent to give people some longer term ideas and scenarios and entry points that could perhaps help them accomplish what they're trying to accomplish in the marketplace. And I'd be happy if you would accept that from now on I will call you my trading warrior brother.
I would love that. Thank you very
All
much,
right.
Dale, and appreciate you having me on and the great service you provide.
Okay, so everyone, please thank Dario Mofardin at Trader_Mars for sharing some great views with us today. I encourage you at the minimum to follow him on Twitter and check out his blog and here is something else for your intelligence gathering, because this was a very intelligent, insightful, thoughtful interview by Dario. I told you that this guy was elite, and I think this presentation confirmed that.
Thanks again,
Good
Dale.
hunt.
Much appreciated.
All right, good hunting, buddy.